Hello and welcome to another update video about ADA. On the ADA chart, we're tracking the 2023 structure here as an Elliott wave triangle. I'm considering at the moment primarily the triangle as an option. We would therefore say that a third wave low was made on the 30th of December, or end of December it was, and we're now moving sideways in an A, B, C, D, E structure. One more lower high in an E wave would be anticipated in this structure, would be needed to complete the triangle and to confirm a triangle eventually, and then a breakout to the downside should occur to new lows. This is the base case at the moment. Based on this, I'm tracking lower degree wave structures. There is also a bullish scenario, which I do not track in detail, and I don't give it much probability at the moment, don't give it very high probability until it proves itself by breaking above 38 cents. But I just don't see it at the moment. It is sort of a structure that only becomes likely when it's proven itself. It just isn't, there is nothing there at the moment that would indicate to me that this is a likely. Surely it's possible. So it's always worth having a bullish alternative on the chart and to tell you when this chart would flip more bullish, when more buying pressure will likely come in. But until then, I'm tracking further downside. So that level is 38.5 cents, and the yellow wave count would be possible as a diagonal structure, but there is zero bullishness on the lower time frames at the moment that would even support a rally in a third wave. So there is also another bearish option. Just want to show that to you, because what happens if we don't get this E wave? Now I just showed you the triangle count A, B, C, D, E. An Elliott wave triangle consists of 5 waves. The E wave would be another corrective wave. So it's not going to be an aggressive move up typically. It would just be a corrective rally. Bear in mind, in a corrective rally, there is also typically one impulse. For example, it could be the C wave. So nevertheless, it would be expected just to be a corrective rally into the area between 30 and 34 cents. However, what happens if price doesn't do it? So in our base case scenario, we are still watching if we can get one more low. We are expecting basically one more low. In the other bearish count, we're also expecting one more low. It would just happen without that E wave rally, okay? We have such a wave count on the dot chart at the moment, polka dot. And in this scenario, the wave 4 will not finish where the triangle finishes, but instead we would get an ending diagonal to the downside, and the wave 4 actually already finished in April. This here would be a wave 1 of the ending diagonal. This here would be the wave 2 of the ending diagonal. The move down is probably still in the making for a third wave of a diagonal. Then there should be a fourth and a fifth. This could actually send us down a bit lower than the triangle, but it would be the next best option if we break below certain support levels and would invalidate the triangle. When is the triangle invalidated? It will get invalidated below 22 cents, so below the June low. If price therefore breaks below the June low without giving us an E wave into the region between 30 and 34 cents, I'm going to track an ending diagonal structure. They are both bearish options short term, would still of course allow ADA to form a lasting low after that, but so far I can tell you there is nothing bullish on the short term, no setup that would support rising prices. Well, there is one. It is a bit messy anyway, but I would rather use it to track it or to expect a jump off point for the C wave in this last corrective wave that we just said, this E wave, yeah? So why, all these letters, what does it mean? Well, very simple, or maybe it's not simple, but if you hang around, you'll find out. So the E wave of a triangle is the last wave of the triangle, and it is a corrective structure. Due to the subwave structures, I'm tracking here a 3-wave move, W, X, Y. That means one more high is expected in a Y wave, and this Y wave would be an A, B, C structure. So we're tracking now potential upside in an A wave on the smaller time frames. Condition for that is that the 24.6 cent level is holding. Below that level, this will become fairly unlikely, and currently it doesn't really give me much hope that it's going to hold, yeah? I mean, it doesn't look as if it wants to hold it. So I'm tracking an ABC structure down here into the support area. This is typically the area where I would expect it to turn around, to rally, in this E wave, okay, to complete this E wave. But until I see some evidence, yeah, I mean, there isn't much there that I could use as a potential setup. Yes, surely this could be a wave 1 of wave A. Where's the A wave here? An A wave can be a 5-wave move, so there's a potential wave 1, here a potential wave 2, but I'm just very careful because it just doesn't give me much confidence, this structure. And however, it has entered the support area. You can see it's slowing down. That's what we normally want, but it just looks again so corrective. So what we need to see now for this A wave to play out is a leading diagonal in a wave 1. This could be a wave 2, and it should now take off like this, right? Yeah, you see it's not really doing it right now. It's weekend, so oftentimes that rather confirms that we might get one more low in here. And if it breaks below 24.6 cents, that would in turn increase probabilities for that ending diagonal structure. I mean, if it doesn't jumpstart from here, well, there isn't much more opportunity for it to start. I mean, again, bear in mind, we're just tracking corrective structures here. They can morph easily. I expect this wave count to change as well. This is not a high confidence setup for higher that would be recommended to trade or anything. I can't give you any personal recommendations anyway. But bear in mind what I said in the previous video. It is no surprise if these structures here break down further. We're tracking just corrective structures. There is not really a trend. There isn't really an uptrend here. And yeah, I mean, if we see it move into that direction, we basically can say it's an E wave, but it's not a setup I would put much emphasis on due to the fact that it's just a triangle. In a triangle, there isn't clearly a winner. There's not the bulls are winning, not the bears, okay? So it's just sideways. So be aware that there isn't really the uptrend that would carry this upside. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.